solved problems. Accounting equation. Transaction analysis. Problem. Analyze the following transactions as and fill up the given matrix. The answer to the first transaction is given as an example. Revenues and expenses in the income statement column will give you the net income which you should transfer to owner's equity before you get the final balances. Income statement. Revenues minus expenses. Statement of financial position. Total assets, total liabilities, owner's equity. Business transaction 1. Owner invested 100,000 cash in business. Assets plus 100,000. Owner's equity plus 100,000. 2. Incurred legal expenses and paid cash 20,000. 3. Paid cash for employee wages 25,000. 4. Issued note for cash borrowed 300,000. Received 80,000 cash for services provided. 6. Bought car 500,000 50% down and issued a note for the balance. 7. Bought office equipment on credit 180,000. Provided services on client on credit 75,000. Collected 50% on client account. 10. Owner withdraw cash 5,000. Net income, net loss, final balances. Give the totals and prove the accounting equation. Out of total assets, how much is cash? Solution. Transaction 1. Owner invested 100,000 cash in business plus 100,000 in total assets plus 100,000 in owner's equity. 2. Incurred legal expenses and paid cash 20,000. 20,000 in expenses, 20,000 in the cash assets, minus 20,000 in assets, minus 20,000 in cash. Paid cash for employee wages 25,000. Expense, it is an expense, so minus 25,000 in revenues and income statement, 25,000 in assets because cash is going out, to cash 25,000 minus. Issue notes for cash borrowed 300,000. Cash coming in 300,000. So liabilities are increased to 300,000. Cash coming in 300,000. Received 80,000 cash for services provided. So it is in a revenue. 80,000 received in income statement. 80,000 cash received in total assets. In cash also 80,000 received. 6. Bought car 500,000 50% down and issued a note for the balance. 500,000 asset is coming, 200,000 cash is going out, 250,000 note liabilities is on the increase, 250,000 cash gone away. 7. Bought office equipment on credit 180,000. Assets debit 180,000. Liabilities debit. Liabilities increase 180,000. Provided services on client on credit 75,000. So income statement 75,000. Accounts receivable on assets 75,000. 9. Collected 50% on client accounts 40,000. Cash coming in and accounts receivable reduced 40,000. Cash coming in 40,000. Owner withdraw 5,000 cash. Cash is going out 5,000 in total assets. Owner's equity is reduced by 5,000. Cash reduced by 5,000. Total income is 110,000. When we transfer this to owner's equity, 110,000. Total assets are 935,000. Total liabilities are 730,000. Owner's equity is 205,000. Total cash is 220,000. Accounting equation is equal to total assets is equal to liabilities plus owner's equity. Account equation is equal to 935,000 is equal to 730,000 plus 205,000. Accounting equation 935,000 is equal to 935,000. B. Out of total assets, cash is 220,000. Thanks for watching. Please subscribe to our YouTube channel Accounts Lobby for various solved problems and lectures on accountancy.